Thank you very much for bringing us those views. Indeed, those stocks have done very, very well this week. Well, let's take the conversation forward with our alpha manager of the day. Aditya Sood of InCred PMS is with us. Aditya, thank you very much for joining in. Actually, if I remember correctly, you folks had a house call which was quite optimistic on auto stocks. I don't know if that's still the case or not. But let's start with that sector because indeed it has done very well at a time when there are still some concerns on monsoons, on rural demand. But that hasn't stopped these stocks, even the two-wheeler stocks, from revving up big time. Your views?
Yeah, so I think so. We continue to be, fairly constructive on this space. Reasons are very evident. One is the element of, cyclical recovery, which part of which we have seen play out. Second element, obviously, is going to be the raw mat inflation. For most of these companies, and we would see some a bit of gross margin expansion. Obviously, freight has to be looked at very critically in most of the companies that we are analyzing on a bottom-up basis. What we have seen is that as inflationary pressures sort of have peaked, freight cost would play in favor of a lot of these companies. Another element that we are seeing and what we are hoping for going forward, and we are very constructive, is a rural recovery. And what we are seeing is that there are initial signs of rural. There is a very good probability of rural, sort of recovering. And a big element is going to be twofold. One is the balance sheet repair, obviously. Because of higher gold prices. The second thing is that we are obviously getting into election year. Thirdly, I think so the infrastructure side of the spending is going to be helpful because it helps to generate income for a rural economy as opposed to what we have seen post-COVID in terms of subsidies. So we continue to be fairly constructive on the auto space, particularly on companies which have got a good rural exposure.
Aditya, what gives you confidence about the rural recovery? What are the data points that you have liked, and where is it that you're seeing these green shoots?
So typically what we have experienced is that, obviously there is last year you didn't see too much of food procurement from the government, because the prices were elevated. Secondly, ahead of the election year, there is a fair probability that, you'll have a hike in MSP prices. Thirdly, I think so. We are at a very early stage of companies, FMCG companies now giving a positive commentary on rural India, wherein, rural obviously was under significant distress. The urban side of it, obviously, the discretionary has taken a knock in the sense that, we have seen, EMIs being slightly higher, which has resulted into discretionary spend being curbed. But what we have also witnessed there is that, the trends are mixed in the sense that, we continue to see very high ARRs as far as hotels are concerned. We continue to see very high traffic as far as airlines are concerned. Obviously, the discretionary end of the one end of the spectrum is doing well. Secondly, what we have also seen is that, some of the same store growth of a lot of the QSR companies has been suffering. So what we believe is that, in a trend line sector wherein, the growth is fairly predictable from a 3, 5, 10-year perspective, you get this chance of buying into, companies wherein there is a temporary aberration. So what we expect going forward is that, the QSR companies possibly over 2 to 3 quarters time is going to be accumulation time, because what we have seen most of these stocks, being beaten down in the sense that most of these stocks have declined to the extent of 50 to 60% from their peak prices, and valuations are obviously much more reasonable than what it was in the past. So that is one.
Yeah, go ahead.
Yeah, hi. Sorry. So that is one bucket that we really like, in terms of incremental positioning from a 2 to 3 year perspective.
All right, QSR space, right?
Yeah, that's correct.
All right. Hi, Aditya. Nigel on this side. Aditya, you were speaking about this rural recovery. How do you play it? FMCG names, the two-wheeler bikes, what is it you're looking at?
Yeah, so essentially, obviously, all of us know that, Maruti is fairly strong as far as rural plays concerned. There could be second derivative plays like obviously Bharti being one of them. Thirdly, obviously Hero Honda has been a big underperformer. Obviously they have a large skew towards entry level bikes. Then there are various ways to play through agri input names as well, which we are turning fairly constructive upon, because what we have seen is that quality agri input companies have not performed well from a 4 to 5 year perspective. So that is what is of interest to us.
All right, Aditya, just one more quick question on the tech space, since that's in focus today. The street seems to be a little bit spooked by TCS's numbers and the commentary as well. What's your view out there? I think you had a couple of mid-cap stocks that you liked out there. How do you approaching this space?
So we are, we are fairly. We believe that this is a year wherein tech is going to be in an accumulation zone. One thing that we have seen in a lot of great companies, and this is a sector wherein obviously balance sheets are very, very clean for most of these companies. What we do believe is that if as long as these companies are gaining market share in a down cycle and valuations are much more reasonable, they will emerge much more stronger in the subsequent upcycle. So the way we are narrowing down in this sector is that, obviously we have a very positive stance on engineering, research and design as a segment within the tech space, because it is a fairly long cycle manufacturing sort of a culmination here. So we like engineering, research, design companies. Secondly, we do also like a combination of value companies in this space, wherein obviously, among the top 4 companies, what we have seen is that, HCL Tech is a good dividend yield play. As we look at today, essentially they have a very high payout, and what would help them sustain over a period of time is, or where the stock is finding support is at a 4% sort of a dividend yield sort of a number. So we are fairly constructive on this space. I think so. What is heartening here is that, one should focus on the deal pipeline. And what we have clearly seen is that, deal pipeline continues to be very, very strong for a lot of these companies. And obviously, TCS has also indicated that there is going to be a slight skew towards hiring more freshers versus laterals. But they will continue to hire, for more than 40,000 odd freshers for this year as well. So that leads us to believe that, and these companies are very, very good in terms of, managing cost levers. And so
all right.
What we believe is...
Yeah, Aditya, if you could name a couple of companies that you all could be having. I mean, you've given us a description of what you like. You look at track the order book, you like ERD companies. Could you give us a couple of names that you all already hold?
So we have exposure in Explio Solutions. We also have exposure in Tejas Networks, which is a telecom equipment manufacturing play. Basically, so these are the companies that we hold in the portfolio.
Always good hearing your thoughts, Aditya. Thanks so much for stopping by. A short but crisp discussion is what we have had out there. Constructive on IT, looking to play some of those rural themes, and maybe the QSR space for the next few quarters are providing a good entry.